Ladies and gentlemen, boys and girls, and children of all ages, we are now here live on the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And also, don't forget to hit that bell icon to get notifications as they drop. I'm giving you guys and girls a live show today. Give me 1 second. Let me straighten up my camera 1 second. Where are we at right now? Straightening up something here on my camera. There we go. Had a little fuzz going on. Hopefully that disappeared. There we go. So, this topic is brought to me. We are in a bear market, meaning that we have dropped 20% off of our high. Welcome to the bear. It is the official end of the bull market. The bull market is over. So everybody that's coming in live, if you want to comment, tell me where you're from. Tell me where you're from. Oh, there we go. That's my good friend Mark Wingo from New Beginnings. Good stuff. Good stuff. We got Miss Butterscotch. What's going on? Good afternoon. Good afternoon. All right. So we're gonna jump into it today, but let me share this out. We got Atlanta, Georgia. And yeah, especially if you guys and girls are coming in, tell me where you're from. Mark is here from Atlanta, Georgia. Tell me where you're coming in live. All right, we got William Williams says, shout out from Virginia. We got Virginia in the house. We got Atlanta, Georgia. The proud dad is in the house. What's going on? The crazy part is that, a lot of us haven't met in person, but I feel like I know y'all all the way. We got Donaldo. Oh, what's going on? That's my guy over there in Detroit. We got Detroit in the building. What's up, Donaldo TV? We got Miss Amber Mead coming in from Fit Mole. Amber Mole coming in from Philly. Miss Amber Mole, I remember you commented on my one of my posts yesterday, and you was asking me about. You was like, "Hey, should I buy this for $18?" And you were saying this is like an insurance policy, but I want you to go look up that symbol today and see how much it's worth. I know it's $18 when you comment, so take a look at it. Because that's the thing I love about finances. You ain't got to sit here and go off of what he said, she said. You can see it for yourself. Okay, Miss Amber, thank you for tuning in. Abraham, Houston Texan. He said he brought some GE this morning. Okay. We got a live attendee. Okay. Indo from San Diego. Indu from San Diego. Hampton Roads, Virginia. Okay. All right. Miss Tamika, she's been holding it down in Atlanta. Okay. She's in the house. Keys hides everyone in Jersey. All right. Okay. So we got a lot of good people in the house. Y'all give me 1 second. I hate to do this, but I gotta share this out on my different Facebook pages. And I hate when it repeats me too, but we're gonna try it. And you can comment for the people that are tuning in on Facebook. I can hear you on Facebook as well, or not hear you, but I can see your comments. And as you drop comments, I will put them in. So y'all give me 1 quick second to share this post out. And if y'all like the content, hopefully y'all share it out too. So we're going to jump straight into it. A lot of people have been saying, hey, Prince, I see the market is going down. I'm already invested. What should I do? I'm jumping new into investing. What should I do? So we're going to jump into all that good stuff here today on this live episode. The bear market is here. It's nothing to be surprised about. It's nothing to be shocked about. It's to be expected. We've been in the longest running bull market, up market that we've seen in the past decade. So this is when you're going to see the real investors come out. All the play investors, everybody's a genius. Who remember my episode? Give me a comment if you remember my episode of everybody's a genius in a bull market. A bull market is when things are going up. Everybody's a genius. Everybody's smart. Everybody know everything when the market's going up. It's times like this where all your friends who was all big on Tesla, who was all big on space, who was all big on investing, they get very quiet now. They're, oh my God, they're scared because I was the exact same way, right? But now that the bull is out, not the bull, but the bear market is out, meaning that we're going down, we got to know how can we profit from this. So let me share one more out, and then we can go ahead and get started today. All right, there we go. Okay, we got some more comments coming in. Okay, Abraham said he's from Texas. He brought GE this morning. Indigo from San Diego. I think I saw those. There's a lot of uncertainty in the market right now. Please explain. We're gonna get to that. Proud Dad, he's like, we're going lower. That's what happens. Oh yeah, okay. You're responding back to Proud Dad. Okay. All right. So right here, as you ask me a question, I'm going to bring it alive. Miss Indu, I think she says from San Diego, or Mister. I'm not sure. I don't see her face. There's a lot of uncertainty in the market right now. So I was someone coming into the market. Of course, when we're in the bear market, you're going to see lower lows. Okay, one more second. We got Cleveland, Ohio. Cleveland, Ohio. I never been to Cleveland. Never been in Cleveland. I've been in a good bit of places, but not Cleveland. But I thank all you guys and girls tuning in across the globe. I appreciate it, Mister. Okay, Mister Indu. Indu. I don't even want to try to pronounce your last name, but okay, from San Diego. A lot of uncertainty, guys and girls. What you're seeing, please don't be me that I made in 2008. I made a video called "The 5 Mistakes That I Made in 2008." This is a bear market. This is part of investing. It's a side effect of investing. Anything you invest in, whether it's a house, whether it's real estate, whether it's a piece of land, property, it don't matter what it is. It's going to have good times. It's going to have bad times. It's like a relationship. Okay, well, we got beef in the house. Okay, he's coming from Rhode Island. You know, I like that's a pretty. He said, he said, I'd rather watch you than Steve Harvey. Oh, that's a compliment, man. I appreciate that, B. Appreciate that. So, guys and girls, I want to tell you this is a cycle, right? Just like everything in life has a cycle. You know, women, they have a cycle, right? Guys have cycles. You know, we're in the cycle of life and death. We're born, we're going to live, then we're going to slowly die, right? Everything has a cycle. The business has a cycle. We just hit all times highs. We was just running all time highs in companies and things like that. So we're expected to hit a downturn in the economy. So relax. This is what is supposed to happen. You're seeing things go through this cycle. I was financially illiterate. The show here, I'm making you guys and girls financially illiterate and letting you know that I'm letting you guys and girls know that we are in a cycle. You know, we have a trough, then we have an expansion, you have a peak, you have a recession. Just like let's take like a musical artist, a hip hop musical artist. They are underground, they start expanding, they hit their peak. What's after their peak? They're gonna fall down something, right? They're gonna fall down and then they have a resurgence maybe later on in their career. That's just a cycle of everything. Business is no different. Now in the bear market, the first mistake, number one, when you keep buying, when you keep dollar cost averaging, and every day you see the market go down 2,000 points, you throw money in, and you're waiting on the bounce, and it's going to come back tomorrow. It's going to bounce a little bit, but it's going to have lower lows. That's what happens in a bear market, lower lows. And what that does is that takes the fight out of an investor, especially an amateur. It takes the fight out of them if they don't know what's going on. They're saying, Prince, what's going on? I don't know, whatever the case may be. The whole coronavirus thing, I'm not really worried about it. Pray I don't get coronavirus. I do have to do a flight. I will be at Burke County Middle School in Georgia. You know, I saw the basketball player that made fun of the coronavirus and then ended up getting the coronavirus. I don't want to laugh at anybody, but it could happen to me too, you know. So y'all keep me in your prayers. I gotta fly. I gotta go to the airport. I gotta fly. I gotta get down to Georgia for Children's Financial Literacy Day on Monday and Tuesday. I got two schools I'm supposed to be at, and I really don't want to cancel those. So I'm really going to try to make it. So hopefully, you know, but I'm not really overly concerned when it comes to the economics. it it's one of those things that it don't matter what it was going to be something that was going to take us off this bull. I don't care what it was. It was, I don't know if it's going to be coronavirus, the bird flu, oil, bonds, president, election, something, a war. It don't matter. Something was going to knock us off this horse. It was just a matter of time. You can smell it in the air for the last 2 years. Ever since Trump got elected, President Trump got elected, everybody was just wondering where was the bear. It was like everybody was watching that bear sit in a cage and he was just rattling the gate. And everybody knew eventually he was going to come out. But it's like we didn't know where it was going to come from. We didn't know what it was going to be. If it wasn't the coronavirus, it would have been something else. I guarantee you. So, uh, okay, yes, I did see him touch the mics. You know, the guy was laughing. He was joking like, "Oh yeah, the coronavirus," touching the mics, and then couldn't figure out he had it. So I don't want to be the second guy to get up here and be like, "I'm not concerned with coronavirus," and then y'all see me laid up in the hospital next week because I got. So it is real. It is real. I know some people in my local area have gotten it. So it is a real thing. It's a real concern, right? But I think people are overreacting. But the market was at an all-time high, the longest running bull we ever had. Everybody was looking for a reason to bring it down. Every time something happened, every time somebody sneezed, oh, is that going to be the bull? Interest rates get cut low. That is that the bull? My bad. I'm sorry. Hit my own microphone. So everybody was on edge. Everybody was on edge. Everybody was looking for that thing or what was going to happen. So now that it's here, this is a typical bear. So when somebody is dying, when somebody is dying and the paramedics are trying to resuscitate you, so they hit you with the shocker. So you're like, ugh. You jump up every now and then. Ugh. You jump up every now and then. That's what the market is doing. It's dying a slow death every now and then. Tomorrow you're gonna see it probably run up 800 points. You're gonna be like, oh no, it's back. And hopefully I'm not rambling, not making sense. But you're gonna see the market as it's going down. It's gonna have jolts every other day. It's gonna have jolts. You're gonna be like, oh, it's coming back. It's coming back. No, that's a slow death. But if you zoom out and look at the chart, you're gonna see a downward trend. It ain't but three trends when you look at a chart: upward trend, sideways trend, downward trend. What trend are we in right now? A downward trend. The trend is your friend, right? So, yes. Let me see here. Let me get some more. I know some people comment. Let me show some of you guys comments. Okay, Curtis said he brought some GM and Marathon stocks a few minutes ago. All right. Facebook. We got somebody coming in from Facebook. Are you in natural homemade soap manufacturing units? It's in India. No, I'm not. I never heard of that company, and we're going to kind of get into that too. Right? Miss Butterscotch said, unfortunately. Okay. Okay, we got West Palm, Florida. I think I drove through there once before. And Curtis is coming in from Alabama. Proud Dad say, hey, Burke County, that's right up the road from me where I grew up. My wife is from there as well. I'm raised there. Yes. Monday is Children's Financial Literacy Day in the city of Waynesboro, Proud Dad. I was born in Augusta, Georgia, raised in Waynesboro, graduated Burke County High School, went through the whole Burke County system. So I'll be at Burke County Middle School on Monday. That's the schedule is. So y'all, hopefully I don't catch the GG. Okay, safe travels, Ms. Amber said. She said, just be extra careful. Oh yeah, I'm gonna be in there in a hazmat suit. Oh yeah, I saw him touch the mics. Mark said he agrees. Okay. All right. So Max B said there's blood in the streets. Yes, it is, definitely. He said, let's get the likes up. Yes, definitely. Y'all hit the like button. We got about 30-some people catching this live. Somebody said just watch forward. We're gonna get into all that. William said the trend is your friend until it ends. That is true. What trend are we in right now? Guys and girls, think about it. Response, she was asking when women have their cycles, right? Yes, yep, they have their cycles. Everybody has a cycle. So I'm buying more T stock. Somebody's buying Ford. Okay. All right. So somebody said, I lost so much with Carnival. You just was a little early. You overpaid for it from this heirloom financials. You just overpaid. That's how I like to use Buffett's words. He like to say, I just overpaid. I didn't it wasn't a bad investment. You just overpaid. You paid $50 per share, you should have paid $5. But okay, let's get into the good stuff. While we're here today, how would you invest $500 coming to the market? First of all, ladies and gentlemen, I put out a video yesterday, the day before yesterday, and I was talking about inverse leverage ETFs like a Sierra Papa X-Ray Sierra. Put an insurance policy on your investments. And what I mean by that, put an insurance policy on your investments. If I had a $500 investment, I would allocate about at least 10%, $50. Uh, I would allocate about 50% right now, right? Um, Not 50%, but 10%. And I'll put about $50. I meant to say, take about $50, and I will buy an inverse leverage ETF like a SWPPX, a SDOW, all those guys out there. Why would you do that, Prince? Right now, the trend is downward. The bear market is going to go down. So what I do, I go in, I buy it. Today we dropped 200 some points. I made a 20% return. I sell it. I buy it again tomorrow. If the market takes off and turns off into a bull, majority of my portfolio is made for the bull anyway, so I'm going to win and I will lose on the downside. I'm fine with that. It's like this. Every day you have a house insurance, car insurance, health insurance, life insurance or whatever. You got car insurance. Like I pay $200 a month for car insurance. My car don't wreck this month. Guess what happens? They don't give me my money back. No, they just say, "Hey, thanks for playing." I lose $200. But if I go out there and somebody hit my car, the car I drive right now is probably worth $1,500, $2,000, right? So, but it covers me. It covers, they're going to total my vehicle because it's not worth repairing. It's a good A to B car though. But if somebody hit that car, I would get my money back, just because I had an insurance policy. So get yourself a nice insurance policy. That's what I would do first, right? Second thing is if you're looking to invest and you're looking at, hey, I got $450 left. Prince, what stocks can I buy? What would you like to buy? Now, don't get crazy. Don't get overexcited and try to buy all the stocks. Because I'm sorry to tell you, ladies and gentlemen, when the bear market comes, the bear market, unless something crazy happens, it's going to be here for at least 6 months to a year. I wouldn't be surprised if they canceled Berkshire Hathaway annual meeting. That would not be a big shocker to me. But this is the thing, right? Bull markets, bear markets, when they come in, they last from 6 months to a year and a half. So that means that for the next year and a half, we could be going down to 15,000 points. If they wasn't hitting those circuit breakers, for all of my people out there, I learned something new. I'm not going to say when I was dumb at it. Uh, the circuit breakers that James talked about live on Wall Street. If the market drops more than 7%, uh, if the market drops more than not 7%, if it drops more than 7% in a trading day, it automatically stops the market for 15 minutes. And uh, when that happens, that stopped the market from falling. So what happened in that case, they hit, I don't know how many times they don't hit the circuit breaker. They don't hit the circuit breaker like 3, 4 times. And that comes from what James had taught us the other day. It happened in 1987 when the market fell 28% in one day. So they want to stop that from happening. If they didn't have that, uh, the market would be down. I think we'll probably be at 18,000 right now. We'll probably be close to about 14, 15,000 if they wasn't hitting those circuit breakers, making people stop trading. So with that being said, we are in a downward market. In a downward market, the market will jump, but then it will go back down. It will jump and it will go back down. So I would have that inverse ETF as my insurance policy. So to catch the market as it's collapsing, as it's falling, as it gets to the bottom. I'm not smart enough to pick the bottom. Some people pull all their money out. The worst thing you can do, don't sell, right? Don't sell nothing in a bear market. If you have a stock, I own Apple, I got Google, I got some Amazon somewhere, I got some Microsoft, McDonald's. All these companies have done great for me the last couple of years. Do you think I'm going to sell them now? None of you considered selling during the bull market, but everybody's considered selling during the bear market. If I wouldn't sell it for a profit, what in my right mind would make me sell it for a loss? This is what I was telling everybody about dividend paying stocks. So I own McDonald's, I own Apple, I own I can't even think so, but it's on a couple of dividend paying stocks. The good thing about it is those stocks are going to continue to pay me dividends. So don't sell nothing. So now, Prince, I got $450 left. You told me what to do with the other 50. What would you do with the other $450? The first thing I would look at big, large companies that have a lot of cash on hand that got hit the worst by the virus that I know will rebound. Who falls into that category? Apple, Microsoft, Google. These are $1 trillion companies, right? That are $1 trillion companies that have a lot of cash on hand. I think that they're going to make it through this downturn in the economy, and they're going to come back stronger than they were before when everything clears up. So those are the first companies I would look at. So now I get what you're saying. Google is out of your range if you have $500. Not necessarily. If you got the Cash App, you can buy Google for $1, $10, $20, that sort of thing. But if you don't have that, one of the companies I would look at a Apple, I would look at a Microsoft because those are less risk, right? I'm sad to say, but I told y'all one of my riskier companies was Uber. Uber may not make it through this bear market. Tesla may not make it through the bear market. Heck, they couldn't even turn a profit in a bull market. What do you think they're going to do in a bear market? So Tesla might not make it. Space may not make it, right? So all these different companies that I had running on, they may not make it. So to take less risk, I would first start off with big companies that are big boys that I know can make it through. They got enough cash on hand. You're gonna have to do a little research. You're gonna have to look at the 10Q. Go look at my other video where I talked about this, where it show you to see how many companies have cash on hand. It's like this: if I was to lose my paycheck today, how long could I go before I'm declaring bankruptcy? Right? That's what I'm looking at with particular companies like an Apple or Microsoft. Those guys have a lot of cash sitting on hand that they can survive through this bear market. Because it's going to last for about, I'm sad to say, guys, it's going to last about 2 years. So everybody that's excited, they want to jump on now, be calm. When we hit a bear market, it don't jump to a bull market. It don't jump straight to a new high by tomorrow morning. No, it's going to take about almost 2 years, which is perfect for me. For everybody out there who really follows me knows I've been in the military for 17 years and I'm retiring at 20 years, if everything goes my way. And if that does happen, I want the market to crash. I want us to go through this bear market for the next 2 years, and I want to be on a rebound by the time I'm retired. Right? So that's for me personally. But for you to take advantage of everything while it's going down, when you look at it, gold is down. Bonds, everybody's getting slaughtered. It's red all over the streets. So one of the ways you can do is get a nice big blue chip company that's paying a dividend. That's less riskier. Because let's say if I brought Microsoft today for, I think it's trading at 150 bucks. So let's say Microsoft, it drops all the way down to 120. That whole time, at least I'm getting dividends for the next year and a half or 2 years. And I'm not biting my nails wondering if Microsoft is going to make it out on the other end to the bull market. I can't say that about a lot of these new technology companies. I can't say that about a lot of these can't say that about Tesla. I can say that with confidence about a Microsoft, about an Apple, about a Google. I can see those companies making out on the other end. They're going to take some hits, but they can make it through. Now, the next one, Airlines. Look at the company who got hit the worst during this whole time. The travel industry, resorts, airlines. Now, I'm not an airline guy. I'm not an airline stock. You got to go in there and do some research on these airline companies. The only airline company that I can think of off the top of my head that I would look at first would be Southwest, right? Why would I look at Southwest? Southwest is I think the majority shareholder is Berkshire Hathaway, Buffett or whatnot, but it has had a competitive advantage compared to its other guys. So the first company I would look at inside of that airline companies would be Southwest. Do I need to rush and go buy all the stock right now? No, right? So let's take some questions as I'm talking. All right, we're gonna. I see some comments here. Okay, Joyce said I'm buying more T stock. T stock is AT&T. AT&T is a dividend aristocrat, meaning that it has had 20 years of a rising dividend. So if it's 25 years, I think it's 20 or 25 years of a rising dividend, not just paying dividends, but paying dividends consistently that rose for the last 2 decades. So yes, AT&T stock is proven it's going to make it out on the other end, right? Just due to its government contracts. I never personally owned AT&T, but I've owned Verizon, and I purchased AT&T for my nephew for graduating high school. So I need to call and text him and make sure he's invested. Hopefully he's tuned in right now. But yeah, so AT&T, that's a good one, right? It's going to make it out on the other end, and you're going to get paid dividends. Even with the pharmaceutical companies that are working on corona meds are going down like NIO, please look. I don't like pharmaceutical companies. This is why I'm not smart enough for pharmaceutical companies. Pharmaceutical companies, they're flatline. They go like this. They flatline, then they get a patent, and then they just shoot up. So how do I know what companies are going to get a flat line? How do I know what companies are going to get a patent? And what's the bad thing about a patent? A patent, it slowly ends, right? So I wouldn't do that. That's I'm not smart enough. If you're a pharmacy, if you're a pharmacist, I'm pharmacy, but if you're a pharmacist, like I got a buddy of mine, he's a pharmacist. He's in that industry. He knows he has a competitive advantage over me. He may know who has the contracts and who's working on this and whatever. If you work in the industry of pharmaceuticals and you know something about companies or whatnot, I forgot what that company was called. Started with an H, which is Humera, something like that. And you know that industry, maybe that could be something you can look into. But With me, for a general person, I'm not smarter on that industry. In the pharmaceutical industry, they just go flat, then they just jump up when they discover something, and then 10 years from now, when they lose the patent, it goes back down. Not something I'm really too keyed in on. That's just me. A little too risky. I lost so much during Carnival. Yes, sorry for that. You just overpaid. You just probably bought it at the wrong time. Give it some time. It still has some flushing out to do. That's why I don't want people to just jump in and feel like they got to buy everything today. You don't have to buy your bullish material today. Bullish meaning things that you think are going to go up in the future, like a stock or something like that. Because I think we got more flushing out to do. These circuit breakers they keep hitting, I think we got to get down to about 14, 15,000. I think the Dow is going to go to. That's just me. That's a bear market. And it's not going to do it overnight. It's going to take about 6 months to do all the flushing. It's just like when you're doing a detox. You don't just take 2 pills, drink a cup of water, go to the bathroom, and it's over. No, it usually goes for a couple of days. It's a little process. They got to get in your system. They got to flush all this bad stuff out. So that's one of the things. From Facebook, what's that? Keeve King? He gave his hands. Okay, appreciate that. Thanks. What do you think about IVV and F? I think IVV is the S&P 500, right? JW? Let me look it up real quick. I think IBV, it sticks out of my head like I mentioned that before. Yes, IVV is good, but I like SWPPX, Sierra Whiskey Papa X-Ray. That's the SWPPX. IVV is $250 some dollars, but SWPPX is only about 30 some dollars right now, 30 or 40 something dollars. That's a better way. You're gonna get, it's both of them tracking the S&P 500, and I think they usually have low interest rates. They pay the same dividend, so somebody who may only have $500 spending 255 on the index when you can get the same thing for 50 or 40 is better, right? So that's what I don't know what facts. Let me look that up real quick. Y'all keep me on my toes. Y'all teach me a lot of stuff. When y'all ask me these different companies, I look them up. Even though it's nowhere in the world I know all of them, I try to know a good bit of them. Oh, Fidelity S&P 500 index, same thing. $95. One is $95, another one $255. The expense ratio is low. What I'm looking at pays a nice little dividend, but it's going to do well over the future. Not anytime soon. I don't see it within the next 6 months to a year or two. Most bear markets last. If you guys like this content, give me the thumbs up. The reason why I'm here now because I got great response for going live. But what you have to remember is most bear markets last for a while, and the average bear market drops 33% from an all-time high, which meaning that right now we need to be at about 19,000 on the Dow. That means we got another 2,000 points to go, which will probably hit tomorrow morning, if not today, the way things are looking. But that's the average. And in 2000, you go back to the last financial crisis in 2008. The high was October 2007 when the market was at 14,000, and the low was at what the low was March of 2009, and the low was like 7,000. So with over 2 years, the Dow had lost 50%, right? Just slowly going down from its high. Now during that time, it just didn't go straight down, 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 down. Just like when the market go up, it just don't go up, 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 up. It goes up, down, up, down. It has higher highs. So on the reverse end, don't get caught up in these lows. When you tomorrow, when you see the market jump 800 points or 900 points, don't be confused and say, "Oh, it's back." No, and start buying everything up like you're crazy because you don't want to miss the bounce. Usually bounces, it's on life support. It's like I'm dying and the paramedics hit me in my chest and I may come back for a couple of seconds and then I die again. Then I'm dead a little bit longer. That's how it goes in the bear market. Just like the opposite of a bull, right? So so index funds are good, but the index funds you should be buying index funds consistently anyway. Everybody was cool with dollar cost averaging as long as the money was going up, but then everybody got scared when it started going down. This is the time when you're going to flush out the amateurs. This is the times when you're going to see what investors are really made of. And that's pretty much it. So let's go to the next one. Josh said, I'm getting my dividend stocks up. Yes. Hold on. Did I? Wait. 1 second. Okay. She said, "Thank you." Okay, somebody's talking. Okay, Kendrick says, Caterpillar Caterpillar post worst machine sales since 2016. Yeah, that's what happens. You're going to see when you're in a bear market. You're going to see classic signs of you're going to see profits get cut. Corporate earnings are going to cut. Next, you know what's going to happen? Unemployment. Unemployment is going to increase, right? Due to this. If you work at a cruise line, look at the people who's working in a cruise line, or the people who are working on a look at the NBA. Look at all the people in the NBA that's probably going to get laid off or whatever. Look at the people connected with travel who's going to get laid off. So next, unemployment is going to come. When unemployment is going to come, guess what's going to happen? As unemployment comes, everybody, you're going to see the stock market drop even worse. That's next. Unemployment. Unemployment is going to rise, guys and girls. I'm watching McDonald's right now. Smart man, right? I don't think McDonald's will jump anytime soon because McDonald's it's an international company where it's all out in Europe. McDonald's is all out in Europe. McDonald's all in China, Japan. It's everywhere, right? It's pretty much the largest brands, one of the largest brands in the world. The top 5 largest brands in the world is probably McDonald's, Coca-Cola, and somebody else, but I know McDonald's is one of them. They're everywhere, so they have a very international preference. You know, especially in the Chinese market. I mean, I spent some time overseas in Asia and Europe, and I wouldn't be too crazy to be up in the McDonald's itself. So that's something you gotta keep in mind. Okay, Curtis Richardson from Alabama. What's going on, Curtis? Thanks for tuning in. What do you think? What do you think of these? What would you think about some of those pop-up investment groups investing like $1,000 minimum entry? They're advertising on Facebook. What are they talking about? I haven't seen those. Well, are you talking about the ones that are like IPOs? That's the ones you're talking about. Can you clarify that, Curtis? If I see a comment, I will definitely get back to it. Will you say the PEI, the Pennsylvania Real Estate Investment Trust stock, is a good buy? I'm not very familiar with the Pennsylvania Real Estate Investment Trust, but a real estate. This is Miss Leda Nona. I think that's how she said. But real estate investment trust, I would have to see the structure. You got to look at the structure. What type of dividends are it paying out? It's a real estate investment trust, but what type of real estate is it paying into? Is it paying into? Is it buying commercial real estate? Because I hate to say this, but this is a domino effect, ladies and gentlemen. When you see all these companies like the NBA is shutting down, you see all these conferences that are stopping, travel companies that are stopping, unemployment is going to go up. Unemployment is going to go up. Next thing you're going to know, real estate, I think, is going to come down, right? Which is great for me because I'm going into the buyer's market. So I can see real estate having an effect of going down as well. Just like in '08, when we had the financial crisis, you've seen real estate come down with it too. So right now, the crazy part is you're seeing Bitcoin, cryptocurrencies are down. Everybody's down right now. The only thing that's going up are inverse ETFs. And the safe havens are your consumer staples that are paying dividends. Like your Clorox bleach, your Colgate. Like these, everybody buying up toilet paper, whatever. But Coca-Cola, uh, Coca-Cola, things like Coca-Cola, Walmart, those companies will still be around. They will still do well. How will they stock perform? With all the pressure they're selling, I don't see the stock performing that well. So that wouldn't be something I'd be too crazy about. So that's my thing. So that's my outlook on it. Gerald Martin coming in from Facebook said GD. Thanks. Oh, I think he's saying good day. Right. Thanks for the broadcast today. Made a quick list of some stocks that are starting to dip into. What do you think about Starbucks, Disney? I'm not sure PM and AEP, but I definitely know Starbucks and Disney. Yes, those are great companies. You're looking at Starbucks, you're looking at Disney. Yes, all those Disney is going to have lost profits. I wouldn't be jumping on them right now because I feel as though they have some more falling to do. Disney, especially since it's an international brand, it's a large gathering. Spring break coming up. I don't think too many people are going to be running to Disney, right? So Disney would experience some losses. So I think you're going to better get it for a better price after his earnings reports come out because they're going to all these corporate companies are going to report losses in the future, and as they report losses in the future, the stock is going to drop. making it a better entry for you. Don't feel like if you are a bullish person, if you're somebody that's going out here buying stock, don't feel like you got to go do it today, because I think we got some more flushing to do. Right? You're going to see some bounces along the way, but I think we're going to be bouncing on our way down. Like you see the chart behind me, every day you're seeing, when you're watching the market every day, you're seeing it jump. You're like, oh, I could have jumped in. But if you zoom out, you're going to see us in a downward trend. So take advantage of that downward trend as we start to slow down. Okay. Manifest good energy. High Prince, what do you think about the P? When y'all put these symbols in here too, I'm gonna look up this symbol. Y'all need to write out what the company is. Just tell me what it is sometimes. So I'm gonna look it up for you. That'll make it a whole lot easier, because I don't know what PL in it sounds like Pennsylvania. It's a freight line or something. Planet 13 Holdings for $1. No, no, no. For a long term buy, no. Not in this economy. It's $1. This thing is it lost 20% today. It's not profitable from looking at it. I'm not messing with no companies that are not profitable, because they're not profitable. If they couldn't be profitable in a bull market when the money was easy to get, what do you think is going to happen now when money starts to get tight? Right? So no, I'm not looking for unprofitable companies just trying to figure their way out. The last place you want to do is try to figure your way out, looking for a job in a recession. You know, it's just like if you was on a job market doing low unemployment, you got a better chance of getting picked up. It's not as hard. But if you right now, when it gets cold outside and you're trying to find a place to eat, it's a little tough. So the reason why I don't look into this one, I look at your competitors. I look at all the other stuff I could be getting right now. Look at all the stuff I could be doing. Not interested. Okay, Amber said I looked up SPXS this morning and the price is up $4. Still doing some research on it, but is this something you would suggest for a brokerage account or a Roth IRA? I have both. With TD Ameritrade. Tomato. If they're both your accounts, Amber, they're both are going to affect you in either way. Yes, SPXS. I own that, and I'm going to be selling that today, and I'm going to be buying it again for tomorrow. So that's my life insurance policy. It went up, I don't know, like 20 some percent. When I get off this live, I'm going to sell it, and I'm probably going to buy it again. And if I'm wrong, then I don't care. But if it market, the trend is your friend. I'm following the trend. So one of my ways to take advantage of this trend right now, it ain't nothing else in my portfolio up but that. So that's my short term. So while I'm waiting on that bull, while I'm waiting on that bear to get back in the cage, in the meanwhile, I'm just going to take advantage of that inverse ETF, right? So, but yes. So what I recommended for a brokerage or a Roth IRA, I don't think the difference. I don't. I don't think it'll be it's both your money. So if you lost $100 in your Roth IRA versus your brokerage account, I don't see how that would be drastically different. They're both your money. Well, you know what? To be honest with you, let's be honest with you. Best way to do it is your Roth IRA. I'm sorry about that, because it's a tax shelter. A brokerage account, if you start to sell that thing, let's say if you brought SPX and you wrote it all the way down, and look it up, Amber. Look at how much SPX was costing in 2009, around about March. How much did that thing go for? Just look that up. But if you made that's a large capital gain tax you'll have to pay. So if you made $10,000 or whatnot, that's capital gain tax you're gonna have to pay with a brokerage account. But if you got that in a Roth IRA, you already paid taxes on that money before you put it in. So the tax shelter Roth IRA is better. All right. Stephen Lewis, what's up, Burke County Bears? What about Baba? Hey, Stephen Lewis, y'all give a round of applause for Stephen Lewis. He's from Burke County. I think he was like a class or two behind me. This guy that went off and became a physician assistant. He's a doctor now. You need to be telling us what's going on with this coronavirus. So he became a physician assistant. So coming from my little small town, I'm glad to see you. Glad to see you tuning in live. Baba, no sir. That's like the Baba is like the Amazon for Asia right now. Ain't nobody trying to buy nothing out of Asia. And I think that going forward in the future, companies are going to me being on submarines. I'm being a submariner by trade for 8 years in the United States Navy, right? We always talk backup to a backup plan to a backup plan. When I started doing submarines, I was so young that I didn't even know how much danger I really was in. I knew what a submarine was, but I didn't know about the nuclear. We got a nuclear reactor. We had tomahawks. We underwater. I mean, you got to be highly trained, and we're taught backups to backups to backups. And I was so dumb back then. I was like 19. I didn't understand how much danger we really was in. And the older guys that was like in their 30s and 40s, they would be standing over. They're probably tuning in now. But I used to be like, man, why these guys take everything so serious? Man? Why we gotta do all this training, man? Goodness. Not knowing that if a fire breaks out in the middle of the ocean, there's no fire department. You know, uh, but that's the way I was looking at it as well. So, but yeah, Baba, no, I think Baba got some more fleshing out to do. I think you can get a better price later on if you wait, Steven. Or should that be Dr. Lewis? Proud of you, man. Proud of you. Definitely am. But yeah, I would definitely wait on that. I think you're going to be able to get a better price in the future for that. Right? Okay. How come Verizon, AT&T haven't dropped yet? Verizon, AT&T, those are two staple companies. They don't really go up that high either, Max B. They're not that volatile. What you got to look at is the beta, right? Look at the beta of the companies. They have a pretty the beta tells you how do you move compared to the S&P 500. So look at AT&T. AT&T has probably been about the same price, close to the same price range for a decade at least, right? So when things was going very good, these companies wasn't jumping through the roof. So when things are going very bad, they're not jumping through the roof either, right? So that's how I'm looking at it as well. My SWPPX is offsetting my T-Mobile. However, the dividends from T stated the losses. Yes. Yes, SWPPX is paying you a dividend as well. T stock is paying you a dividend as well. But I look at, I don't think those things are going to run green, do anything good for you, at least for a couple months, after we kind of, ring everything out. But in the long run, you will win. So the only way to get around that is $2 cost average. Buy it every single month. Now, if you got an IRA out there, go up there and put 1% more in it, put 2% more in it, and put it into a broad index fund. If you got a Roth IRA with your company, if you got a company out there that's matching you, if they're giving you dollar for dollar, you need to go put $5 in there, right? And put it into your because if you put in $5, especially at a low time, and they put in $5, that's $10 that goes into your account that you're buying at the bottom, that $10 will probably turn into $15 in 3-4 years, and you only put $5. So that's gonna be a 300% return on investment off your $5. So if you got, I should have said that in the beginning of the show because so people can listen to that. But if you have an IRA, start there. Especially if you got a company that's matching you, if I put in $5, my company put in $5, that's $10. The market returns. Now that $10 turned into $15 off of my original $5. If you do that with $500, just do the math, right? So that's one of the ways I forgot to bring up as well. My company is directly related to travel industry. Hell, I might get laid off. He said, hell, I might get laid off. I'm not laughing at you per se. I'm just laughing at the situation. Right. I mean, it just is what it is. I don't know what to say about that. Unfortunately, Harloon Financials, it's just part of the game. It's just part of the situation. Uh, you know, um, just being in that industry. Your industry, this is what happens. Welcome to the bear, ladies and gentlemen. Welcome to the bear. All you new age investors who were look at all your buddies and friends that was so many geniuses two last year, 2-3 months ago, or whatever. Now they're pretty quiet. They don't know what to do. They're scared. They're, oh my God, let me run. This is when they're gonna wash out all of the fake investors gonna get washed out. All the amateurs, the lighthearted. I got washed out in 2008. I was that guy. I'm not getting washed out again. It's a reason why Berkshire Hathaway and Warren Buffett was sitting on 128, $130 billion, right? Because they got outbidded for a company last year. And they say, you know what? Interest rates are very low. Money is very easy to borrow. We can easily get outbidded right now. I'm going to wait till money dries up and we're going to see how many people are going to do well, right? So he's going to get better prices. Do you think the GDP will be negative in 2000 in Q2? I think so. The way we're looking at it, you look at the NBA, they're not playing games. That's going to hurt profits. Apple, they're making less phones. China's they're our warehouse of the world, and if they stop producing, it's going to affect a lot of people, right? It's going to, if they stop producing, that's going to affect a lot of people. And our GDP is our gross domestic product, and he's saying, is that going to hurt our Q2? Right now, we're in a technical recession. By the charts, we have dropped off 20% off of our all-time high, putting us in the bull market. Now, for us to be in a fundamental recession, we have to have 2 quarters of a declining GDP. So that means Q2 GDP is going to come out. We're probably going to have a negative, or we're going to have a decline in our GDP because all the stuff that's shutting down. Companies are already telling you they're going to report losses. So I can see our GDP dropping. I mean, everybody's telling you that already. Carnival is telling you, hey, cruise lines, NBA, Apple, everybody's telling you, hey, we're going to experience losses. We're experiencing losses. So they're already preparing investors for the inevitable anyway. So yes, I can see it. And if it happens for 2 quarters, that's a fundamental recession. All right. that's a funny that's a funny avatar that he has. Steven says, what do you think about Ford? Howdy from Severn, Texas. Okay, South Fort Worth. Okay, what's going on, Texas? Ford, I don't know. Ford sucked during the bull market. Look at the last 10 years when we was in a bull market. Ford sucked. I had Ford. I was all cheap stock. Bought it for like $10 and it just sat there and it just went down. I think it's like $5 now. Ford is probably going to go back to a penny stock. So if you sucked during the bull market when everything else was doing well, what do you think is going to happen now? I think you're probably going to go down to $2, $3. Then I may snag something up. But no, he wasn't doing that good when everything was going well. So no, that's not me. I'm not a big fan of Ford compared to his friend. The cannabis market, Manifest Good Energy said the cannabis market and marijuana companies. No. Right now, if I told you to name the top shoe industry, you would say, I would say name the top 3 companies in the shoe industry, a sneaker industry. You would tell me Nike, Adidas, and probably Fila. If I told you to name the top 3 companies in uh, food, you'll say Walmart and Target or something like that. If I say name the top 3 companies in telecommunications, you probably would tell me Verizon, AT&T, and who else? Verizon, AT&T, and now I guess T-Mobile, right? But if I told you to name the top 3 companies in the tech world, you'll probably say Amazon, Apple, maybe Google, right? But if I told you to do the exact same thing in the marijuana industry, it's like it's a million companies out there. I don't know who is who. I don't know what is what. I think that 98% of those companies in the cannabis industry right now will be flushed out when things kind of materialize. I think it's not a very mature industry right now to where right now I can't say, oh, the top marijuana company is Aurora Cannabis. There's so many of them out there. I can't pick. None of them are profitable. I don't know if they can make it. So that's my thing. Cannibal growth, yeah, that's my. Amber said, "Thank you. I will look into SPXL. I was thinking the same thing regarding the tax laws. Smart lady. Amber is pretty. Is Amber Mo is a pretty smart lady that's out here investing and looking for ways to invest and being engaged with the world of investing. Man, I wish I could have just tuned into this in 2008. I wish I'd have had me now back then. I'm 35. I wish I can talk to the 24, 25-year old me now. And but hey, I live and I learn. I became more seasoned. I said I never do that again. Manifest Good Energy. Can you recommend broker firms to roll over 401k into? North Carolina, love your channel. Appreciate your advice. Um, I don't know any companies. I'm not tied to anybody. I'm not sponsored by anybody. I do have a lot of sponsors that reach out, but I haven't picked anybody yet or who I want to get behind because before I sponsor anything, I gotta like you and I gotta use you. I really gotta believe in a product. I'm not just gonna throw my name on anything because I respect you guys and girls that tune in, that has given me this platform. So I have a responsibility. I'm not just gonna sell you guys any and everything for a couple dollars, right? But right now, um, you have TD Ameritrade. I know you can. It's a ton of them out there. You could do TD Ameritrade. You can do an ETrade. Anybody will take your money, right? So, um, I really can't say on that one. A brokerage firm I would roll my 401k into. Um, I mean, me, if it was me personally, if I had to roll into somebody, since I'm familiar with TD Ameritrade, ETrade, they're the big boys on the block. Those would be my first considerations. But you got to look at the fees, because anybody can hold your money, but look at the fees. How much is it going to cost you to buy and sell? How much is it going to cost you in administrative fees? Those are things you got to look at. Because if you buy Google with TD Ameritrade, or if you buy Google with an ETrade, or you buy Google with Fidelity, it's all the same. We all gonna have Google. You just got a different vehicle, but you just want to know that your vehicle is not leaking oil, right? So that would be my best advice, manifest. It's I think that's what Sierra Jones. Yeah, I'm a little slow. I can't read. So, which airline companies or cruise line companies would you recommend buying stocks into right now at its low? Me, the first one that comes to mind is Southwest Airlines, but I wouldn't buy it right now. I think when the earnings report come out, I think these stocks are going to get hammered even worse. So I think you're going to be able to get a better price if you just wait and hold your horses for about a good 3 months. We got more fleshing out to do. You can tell the market got more fleshing out to do because they keep stopping it. What I mean by fleshing out, I think stocks are going to drop even further, and you're going to be able to get a better price. So I will hold off, and I will look at the first company I would kind of look at. Carnival has the biggest names, but I would tell you to do your homework and say, hey, you have to. I would, I do a video on it. I would look in the airline stocks. I would look at the top 3 airline stocks and come up with some, since everybody's asking about it. But the first one I would look at is Southwest Airlines. I would go into that industry. I would see who the top 3 are, and I would compare them to themselves financially. Who can make it through? Who does a better job of managing money? Who has a durable competitive advantage over the long term by who has capital, who can bring in the most money, and not their total revenues, how much money they're bringing in, but how much money can they keep. It would just be like if I'm making $100,000 a year and you're making $50,000 a year, but I'm living some big baller life and I'm spending 80,000 of it, and you're only spending 10,000 of yours. The person who makes less money is doing a better job. So just because a company makes a lot of money doesn't mean that I would choose them first. All right. So let me get on through here because I gotta get out of here in a little bit. So we get to everybody's question. Isn't Tesla partially government funded? Do you really care if they make a profit? Yes, they are um, funded by the government. I think I want to say it's about 60 to 90% of Tesla is owned by institutions, meaning big boys, right? And why do I care if they make a profit? Of course, Joyce. If when you buy a stock, you're giving somebody your money, and you're hoping they can pay you back. Would you let somebody borrow money that you wanted back and then have no job? But you're like, oh well, his wife make a lot of money. Yeah, that's good, but his wife can kick him out the curb too. So, but I look at profitability. The reason why I care about profitability is I'm looking at your competitors. If your competitors are turning profits and you're not turning a profit, I got to look at you sideways, right? I need to get a haircut big time. I'm gonna get one today or tomorrow. One Clorox, yes. Um, Barim, the investor, he got the intelligent investor. Yes, Clorox. That's a consumer staple. Clorox, toothpaste, utilities. Those are things that people are going to buy um, regardless, right? And you can make a nice dividend. Well, look at that, trading for $5. I'm done with you, Ford. Thank you for letting me know, William Williams. No, you was sucking during a bull market when everything was running up, when everybody was running up. General Motors, Tesla, everybody was running crazy. Ford was kind of staying flat and actually going down. I'm not interested right now, especially now that we're hitting the bear. If you was doing that in the bull, what are you going to do in the bear? I'm good on that. Helen said, "Hi, Amber." Okay. Arlene R says, "Thank you for recommending God." Thank you for recommending. Okay, I don't know what you mean by that one. Definitely not a God, but okay. Max B, what's going on? That's my guy. How would Trump payroll tax affect the market? Trump payroll tax will put money back into corporations, companies. It will say, let's take me for example. I have 5 people on my payroll, and I have to pay $1 million in taxes, right? In payroll tax. The government comes out and say, hey, you know, you don't have to pay $1 million. You only have to pay uh, 80 million dollars. I mean 800,000, right? So that means that when you cut payroll tax, you just put money back into a corporation. So that's what he did in the first Trump era, and that boosted the economy. The economy ran up on that because he cut corporate gain tax. it's like if somebody cut corporate gain tax. That's just like putting money back into a company without telling them. So that's going to have a good effect on a company. So in the long run, yes. But do I think it's going to turn the market around and take us into the $30,000 zone on the Dow? I'll be very shocked. Right. Oh, she said, I need clarification. Did you say sell SWPPX and rebuy? No, 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 no. Worst thing you can do is sell right now. I was saying buy more of SWPPX now. As the price is going down, just like you was buying it when it was going up, buy it when it's going down because you're going to be getting dividends anyway. Because the dividends are going to be buying it anyway, Miss Joyce. So don't do that. Definitely. Sorry, and if I left any confusion. So, but anyway, I've been on here longer than I wanted to be, but I got everybody's question. Hopefully, y'all got some from that. Hit that like, subscribe, comment, and share button. If you want to support me, don't donate through the channel. Buy one of my books, the Wesley Learns Children's Book Series. If you already brought the book series, I appreciate you, and I love you guys for doing that, for keeping me alive. But if you buy it again and give it to your cousin, give it to your friends, and all the other good stuff. Uh, Max B said, LOL, has the investor show stock took a hit. You know what? Actually, this my platform grew when all this craziness was going on. When we was in a bull market, everything was going well. I didn't, people are tuning in now. People are really tuning in. People are making me step my game up. People are asking me questions, my inbox, my phone. I got voicemails. Everybody's wanting to jump in now. But I just seen a spike in interest ever since the market took a downturn. So I would say the investor show stock is going up. But yes, has my portfolio taken a hit? Yes, but I was prepared for this. I knew it would take a hit. I was ready for it to take a hit. But I told myself in 2008, I said, you got me then. Fool me once. I sold my stuff. I panicked. I thought the world was coming to an end. It was worse then. We was in Iraq. We was in Afghanistan. Oil prices were up. Unemployment was through the roof. Um, Ford was filing bankrupt. Imagine that if Ford filed bankrupt tomorrow. Imagine what the market would do if Ford filed bankrupt. Imagine if a bank filed bankrupt. That was what was going on in 2008. And I was watching the media like, man, oh my God, let me get out of here. Sell, sell, sell. I don't want to lose everything. I'm watching my portfolio go down. And then, 5, 6 years later, I was calling my broker like, did I sell everything? I didn't leave not one share. Why did you let me do that? I could have just, or whatever. So, oh, you said, I think she said I meant dog instead of God. Okay. All right, no problem. LH19 saying, thanks, bro, no problem. Kendrick Taylor said, honestly, we should be on a flat or fair tax whenever counting. Yes, I think we should be on a flat tax. What was his name? Senator, was he a senator? Or whatever he was, Herman Cain said that. He came out with the 999 tax, 9% on state, 9 federal, everybody pay the same tax. That's what we should be. But we live in a capitalistic society where we're here for the capital. Thanks for the great info. Anytime, hang in there. Don't sell nothing. Don't do nothing crazy. Keith said, thanks, Prince. Thank you. Thank you. Miss Buttercup Scott says, stay safe. Will do. All right, everybody. That's going to conclude today's episode. Thank you guys and girls for tuning in. Y'all stay great. Y'all stay safe out there. Y'all keep investing. JW said he appreciate the help. And thank you guys for supporting me. Until the next video, podcast, cartoon, or whatever else you see me do crazy around the globe. Peace. Be safe. I'm out. Thank you.